Let's go to the edge of the trading floor. We're being joined by Scott Gecas with Walsh Trading at the edge there at the CME Group. It almost seems like the wheat is now leading the corn this time around, doesn't it, Scott?
Yeah, for the wheat market, you're running into a couple different things. So we already had supply concerns that was reported for the last report coming out. It was completely offset by the trade war talks. They're trying to throw wheat in the mix with the trade war talks, so we'll see if that actually comes out. The biggest thing and the biggest stat that I read today about the wheat market is the farmers are planting the least amount of varieties of wheat in over 110 years. So right now, I think it was 1909 that they were around 29.2. We're just above that at 31.118. So, I mean, that's pretty significant, and that's one of the reasons why you're seeing a little downside pressure in the wheat market. You know, it's pushing the corn market a little bit lower. The big thing about the trade war talks that everything happened over the weekend saying that the phase one is pretty much signed. We haven't had the details to see that yet, but if we get any positive news about the trade war talks, we can see a big jump in corn just because the overall imports from China are over 207% just globally, not just U.S. or just with South America as well. So if that does happen, I think we're going to see a little bit of bump up or an import campaign in the corn market to China. So we have to wait and see.
Well, that corn number, we really do need to step up those exports, no doubt. You were talking about maybe this phase one deal kind of getting solidified then. How much of that being wrapped up, quote unquote, is already baked into this market at this point? Or would you look for a big reaction to maybe once the ink is dry?
Well, that's the thing. I mean, so when you're looking at this trade war talks, I mean, one day it's positive rhetoric, the next day it's negative rhetoric. So until we get something inked and we get the details released, I mean, it's really up in the air because nobody really knows. So you have a lot of positive trade war talk over the last week and a half or so, but nothing is inked, nothing is set, nothing is decisive. It's just rumors back and forth. So if they do get this phase one done, China is pledging to have about 20 million worth of ag products in the first couple quarters in 2020. But again, it's all rhetoric and it's all rumors. We have to wait and see what really is going to come out. But because of that, no one knows what it's going to. It is driving option premium a little bit higher than usual.
And the soybeans are on the higher side by about only a penny. You feel pretty good about the range we're in here over in the soybean market?
Well, it's going to be really interesting. So in the next few weeks, we have the November supply and demand report. So the farmers and some of the traders that we've been talking to are worried about the yields. They're expecting the yields to be a little bit lower from that report. But again, it's all headline risk, and it's everything that's coming out. We have to wait and see what those numbers are. Headline risk.
Well, that's been talked about a lot this year. We'll be back in just a moment. Stay with us. All right, after the break, we'll talk more with Scott here on the Market Day Report. Well, the cattle market on the higher side today with the pork on the weaker side. We'll go to the live cattle first. The front month is just about set to expire. In fact, Thursday will be the last day for it on that October live cattle contract. We're up 83 at 112.80. December at 116.45. That is up 38, and that's only, 15 cents away from the high of the day. February is up 45. We'll ask Scott about that here in just a moment. But first, let's go on to the feeder cattle market. November up 57 at 145.95. With a high of 146.13. January up 18 at 141.78. I mentioned the hogs were weaker. December's down 33. February down 70. Make that 55 at 72.80, and the April down at 80. Back over here on the cattle, live cattle contracts. Scott, we've got that cattle on feed report out behind us now. Some were saying that it was neutral. Some were saying, it might have been a little bit positive until you look at some of the deferred contracts. But it seems like not a lot of people are reading much into this at this point. What do you think?
Yeah, well, with that cattle on feed report, it pretty much came in line, so that wasn't a big surprise that we didn't see any big volatility or big whipsaws one way or the other. We were always keeping an eye on that 115 level. I've been talking about that for the last week or so. So you've seen a lot of fresh buying and a big volume push. As soon as we broke that 115, we had some fresh buying coming in above that, and as you can see, it's having a little bit of follow through today, pushing all the way up to above that 116 level.
What do you make of this feeder cattle market then? You know, we're up here in this 145, 146 region. Does that put 150 within reach?
Yeah, I think so, especially the way that things are moving around. Is as long as the cutouts remain strong, we still have that uptick in the cash prices. As long as that remains there, I don't think that 150 is too far away.
Well, and you mentioned those cutouts. They do remain strong. We saw the choice jump over $2 today, albeit the selects weren't up quite that much. They're up only 18 cents, but, that choice is pushing 227.51. Still seems to be a little bit of momentum over there on the wholesale side.
Yeah, and that's what you're seeing. Like I said, when we had that break of 115, you've seen a little bit of a volume increase and that pushing strong on Friday, and you're seeing that follow through today.
All right, if you're a producer, what do you do over here in the hog market at this point?
Well, I mean, the hog market is a completely different story. So, if you look at the whole soap opera, the African swine fever, I mean, it's still out there. It's not going to go away anytime soon. There's such strong demand in China that is confirmed just by the Chinese prices being up over 206% just year to date. Keeps rising as the futures and prices in China keep rising. That just confirms that there's more demand for U.S. pork. Now we have Mexico ramping up their exports or their imports as well. So the biggest story is the production in the U.S. So the production levels are at higher than normal productivity. However, the exports are, even though that they're at record levels, they're just not enough to offset that production. But if you're looking long term, I don't think there's any reason why we can't expect a bump up in longer term prices. That is confirmed by option flow. A lot of upside calls being bought. Some of the options have a little bit over 25, 50 cents skew. So the option flow is definitely pointing to the upside.
Thank you very much, Scott. Have a good afternoon. Scott Gecas in Chicago there at the edge of the trading floor.